Okay, so if you haven't already watched the video that has this diagram, go back and watch it. I'll put it in the link in the description below. This video is basically the plan that I have going forward and what a lot of you should be looking towards if you're going in the P&C in the insurance industry. So I'm going to go over the future plan. This is what I used to make. Essentially, I'll just give you the synopsis: 90, 120, 125,000 a year, 141 year, or just under, and it ended up being, it dropped down to 75 the year I left. We talked about that in the last video, so if you haven't watched that, I'll put it in the description below. But right now, let's dive into what you should be looking at as far as an agency or an agency owner going forward. So I have my new plan. Essentially what I did is I joined a company that paid me commissions plus a salary. The salary is pretty low. You're going to start, and I'm just going to give you some averages because I can't give away their payment structure because it changes. And that's why we didn't go super in depth at the farmers one, because it could have changed in the last 3-4 years since I've been there. What we've got here is you're going to have an agent that has a salary. Not all companies do salary, some do all commissions, but I can't do that. I have a family and I just couldn't afford it. I got to feed the family, we got to eat. I have confidence in myself, but I still need the salary. So you're going to do anywhere from $2,000 to $36,000 a year. Okay, most commonly it's going to be closer to the $2,000. That's the average salary that I would expect an agent going brand new into the business, and this is going to be more of a plus commissions. Okay, when you get closer to the $36,000 salary, you're still going to get commissions, but it's going to be a lower commission. Okay, because there's only two ways that agency owners are going to do this. If you are an owner, this is going to make total sense. So you're either going to pay upfront. So the very first, you're going to pay higher money, so $36K, and then you're going to recoup that money in year 3, year 4, and year 5, where you're going to keep some of those commissions back on the renewals. Where the other option is you're going to pay a lower salary, we'll just say L, so 24 a year. That's a month, so we'll switch to 24. 24 a year, and then you're going to pay more commissions over time. So there's kind of those ways. Essentially what's going to happen is, this is what I moved towards, and the reason I loved this design was because I now am making renewals. If you're on this 24 a year the first year, usually the second year it slowly dwindles down, and eventually you're taken off completely, because the whole goal of this is to get you on full commissions at all the time. So this agent's going to make, let's say, $2,000 a month, and there's normally a base. So that base is going to be, we're just going to use this as an example. So we're just going to say 2,000. Now this isn't exact, but this will give you an idea. The base is 2,000 in salary. If you make more in commission, so you write 5,000 in business, 8,000 in business, this is profit, then you're going to make anything above the 2,000. Some companies pay the base, some companies pay above the base, but it just depends on how much money you want up front. Okay, once again, the higher you get, the more you make up front, the less you make in renewals and upfront commissions. So the base we're going to say is 2,000, and we're going to say you're going to capture, we'll just say 25 to 50% in commission. Okay, your average person coming in the door, so year 1, you expect them to do roughly 10 or 15,000 if they have the right leads on the first couple months, and then eventually they're going to get between 30 to 40,000 in premium. Okay, and then once they get to kind of that rock star status, they're going to be 60,000 or higher in premium. Okay, so if you're at the 30 to 40,000 in premium, your company is going to make an average of, let's just say, 10 to 15%. I'm going to go high in this case because I like the bigger number, but I'm going to say 15%. So we'll just say they're doing the 40 at 15%. So you're making $6,000 in revenue from those policies. If you're working with multiple companies, some will pay you 8%, some will pay you 12%, some will pay you 15%. It just depends on what the appetite of that company is. So if I'm selling just auto, they'll pay me a lower commission. If I'm selling auto and home, there's a higher commission, and it just depends on the companies you're working with. Okay, so you're pulling in about $6,000, where once they hit that rock star status, now you're talking, what's 15%? So 6 plus 3, so you're pulling in $9,000 a month. Okay, so $9,000, that's not what the agent's making. That's essentially what you're pulling in as a company owner, agency owner. Now, if you're going to make, let's just say 40% commissions in this case, we're doing both scenarios. So you're making $2,400. So if you're on this base plan above the base, you made an additional $400, which isn't amazing. But if you're on a base plus this, you're making $4,400, which is fairly rare. It's not a whole lot of companies, because once again, you'll see when we play this out for a couple of years that it's going to make a huge difference long term. In this case, you're $3,600. Okay, at 40%. And there's a lot more commissions being made, because now you're making $1,200 more beyond your base. Okay, so you're essentially making over $40,000 a year, which is good, because the average, and this isn't exact, is between $45,000 and $50,000 a year doing insurance. Okay, you're going to see videos out there that are going to tell you can make $200,000 a year. That's long term. That's more of the, and that's including the financial planning. So if that's the case, that's like a whole different industry. They've mixed the financial planners and the insurance agents into one, just so you know that. Okay, so these are the two different plans. This is guy one, and this is after, well, this is after some time where they're making it 60. Now, that's playing it from there. If we were to play this out and just assume that we sold $40,000 every year, and we earned an additional 40%, the renewal on the following year is typically 20 to 30%. We're just going to say 25% renewal. Okay, because you got to imagine, in this world, you're not getting the lead yourself in most cases. Okay, you might have some referrals and some partners that you work with, because it makes sense. Like, you want to get above these limits, whether the company feeds you or not. That's the goal, is for you to get to the several $1,000,000 book. So they're feeding you leads, they're training you, they're giving you the systems in play. You're quite literally just ready to talk to somebody. Okay, you should be quoting 5+ people a day. So these renewals you're getting in this. Now, it gets a little bit confusing here, so bear with me. We're going to go slow. You have, on average, a 10 to 15% loss rate or a retention. Okay, so you're going to lose about 10 to 15% of this book that you wrote. You write 500, you're going to lose about 600, 550, or you're going to lose about 55 to 60,000 the following year. It will happen because customers won't call you. They'll reach out. Someone will save that policy, get it back. Whatever the case is, you're going to expect that. That's pretty common. So let's just say that we're in between these guys. We wrote 50,000 a month. That's going to equate out to 600,000 a year. Okay, we're going to lose, we'll just say 15%. So if we lost 15%, I want to say that's 70,000, but it's 90. I was way off. So retention, say minus retention, which is 90K. Okay, so we're going to have 510, and it'll fall off in different months, so you get paid a little bit differently. But we're going to have 510 carry over to the following year. So if we have 510,000 and we multiply that by the average commission, this isn't what you're making. You're not getting 25% of this. You're getting 25% of the income of the company. Okay. So 510, let's just say the commission's going to be lower on the renewal, so we're just going to say 10%. It's pretty common across the board. So you're going to have 51,000 in money coming in. You're going to get 25% of that. So now you're pulling in 12,750 in renewal year one. So to play this out, you did, let's just say, let's do the 50. So you're pulling in 50,000 times the 15% that the company's making. So they're making roughly 7,500, and you're making 40% of that. So you're going to be looking right around 3,000 a month times 0.40, 3,000. Okay, so you're actually going to make closer to 36 on top of that. So your total revenue for that year is going to be 48,750. Okay, this is a pretty good income. I'm not saying that everybody's going to do this, and it is a lot of work to get there, especially on your first year, because you're learning. You're going to spend a few months at this 10 to 15,000 in premium before you get up to running speed. And then you're kind of in between that superstardom where you're not quite there hitting that 60 every month. And it is difficult. It's not an easy task. You're essentially getting leads. You're working your own leads. You're just involved. Maybe you're working an extra 10 hours a week or something. And then you're going to see where it eventually pays off. So that's your first year. Well, technically your second year, right? You're backed. You've built it. You made the 20 some odd, 30 some odd, 40 some odd thousand a year. Now in your second year, you're at just below 50. Your third year, it's going to play out the same. So now you've got, double the renewals. So now you're 25,000 and you're making 36 again. So we're going to just add this 25 on. So you're going to be at 60 some odd thousand. We're just going to say 60,000 plus. And then you're at 70 some odd plus, and so on. So year 2, year 3, year 4, and essentially by your 5th year, if this plan worked out perfectly, like I said, it's not, this is like the perfect scenario, you're going to be making that 90,000 plus. This doesn't include any bonus money. So what happens at the end of the year is most agencies will get a bonus commission if their loss ratio is low. So if the premium that they pulled in and the losses that their customers have is like half of that, then they're going to get a kicker or a bonus for doing good business. And there's going to be a few $100,000 coming into this company with these companies that you write with. And that will be divvied out in most cases. Maybe it's a vacation. Maybe you just get a $10,000 paycheck one year. That's kind of at this level here. But it's just essentially giving you that additional bonus. So can you make $100,000 in the P&C insurance industry? Absolutely. Can you do it your first year? You could. Is it likely that you will? Not in most models today. Will you do it by year 3? My scenario, I say no. Okay, but you're at a pretty good income. Keep in mind, once you've built this, and essentially you're going to get to year 6 and year 7 before you start running into some small issues where you're going to write as much as you lose. Now, I'm going to go into that next, so hold on to that thought. I'm sure I messed up some of the math here. Some of you are going to say it's impossible to write this, but I see agents write this all the time. Some are going to say it's impossible to write this, and that's a lot more difficult. But there are agents out there that if they get the right leads, they have the right business, they get the right referrals, they're going to be those rock stars. So you're looking to become that rock star, you are going to make a pretty good income in this industry. Let me know in the comments below. I'm sure there's something on here that I didn't do correctly. I'm looking at this number. I'm like, okay, maybe it's not 15%. Let me know. I'm curious to see what you guys think as well. Leave those in the comments below. The next part you're going to want to learn is at what point can you not do anymore? Where does this max out? Because there technically isn't a glass ceiling, but there really is. And so watch my next video where we're going to talk about what's the max that you can make as an insurance agent doing it alone. Also, don't forget to like and subscribe. Hit the bell icon if the video isn't released yet. So let me know what your thoughts are. I'll see you guys in the next video.